Angelo Zino is Senior Equity Analyst at CFRA Research, and Chris Johnson, the CEO of Johnson Research Group. I'll start with you, Angelo. I mean, you just want to say wow, right?
Yeah, absolutely. I mean, when we kind of look at the results here, clearly all about iPhones, right? So, they beat by about $4 billion, well ahead of our expectations as well as everybody else's. And I think the other big, positive really came out of China, where they finally returned to growth there. So year-over-year growth of about 3%.
So you have a $350 price target. You raised it up from $330 and a buy rating. I thought that, first of all, you're saying that they surpassed your expectations. So it's not just about the numbers, but what the expectations are. They surpassed your expectations. iPhone sales, wearables, and services are really where it's at going forward. How high can this really go? Do you feel like the 350 number is conservative?
Well, a $350 target price is clearly based over the next 12 months here. When you look at, why the stock is only up, let's say 2 or 3% relative to, let's say, us increasing our estimates by about 8%, clearly has to do with the way the stock has moved here over the last year, right? It's almost kind of discounted, a great move or a great beat on the side of for the quarter, and they did just that, well ahead of expectations. Now, we do think estimates will continue to grind higher in the coming quarters, and because of that, we do think the stock continues to work here. But that being said, don't expect the type of gains you've seen here over the last couple of quarters.
Right, and the China story was a good one, which you mentioned. Chris, I think it's interesting. We talk about Apple, we see it at new highs, and just to put it into perspective, you're watching Apple, but watching it as a very crowded trade, and you like other areas such as healthcare and retail and software. So just give us a balanced thought on your Apple investment ideas versus what we really should be investing in.
Let's think about it from that crowded trade perspective first, Nicole. When you look at two earnings reports over the last week, Intel and Apple, both were great earnings reports. The reaction to the earnings reports were starkly different. You had Intel that shot up 8 to 10%. Now you've got Apple, as Angelo just mentioned, that's just bumped up about 2%. It comes down to the fact that everybody's already, use whatever term you want, baked the results into the cake. It's priced to perfection, et cetera, et cetera. The fact is everybody has been piling into Apple stock for the last 6 months or so. It's doubled. It's up over 100% over the last 12 months. So when you look at it, it's just going to be a little harder for Apple to continue going higher simply because it's saturated with buyers. The other side of that is if something does happen, whether it's a market correction, whether it's people just trying to rebalance away from Apple, the professional portfolio managers, you're going to have some consistent selling on Apple. So I tend to look for a little less crowded trades. One of them right now that's on my radar is NVIDIA. NVIDIA suffered the same thing that Apple's seeing right now a few years ago, where it went just parabolic and then all of a sudden shot down because everybody sold out of it. It was crowded. Keep your eye on some of these less crowded trades. I do think Apple, and I agree with the other guest, Angelo. I do think Apple's got, I think it's got a ways to go on its way up. I just think that we're going to have a bit of a rest here. I don't own it. If I wanted to own it, I'd probably be selling some puts on it, using an option strategy. If I did own it, I'd be selling calls right now because I just don't think you're going to see the same parabolic growth out of Apple over the next year.
I see. Angelo, you can react to what Chris has said. The other thing I thought was interesting was Tim Cook was noting that the camera was part of the reason and the price were part of the reason that people jumped in on the iPhone, and we have 5G looming. Put that into context for us going forward.
Yeah, I mean, clearly when it comes to the beat here on the iPhone side of things, I mean, I think what Apple really did here with the iPhone 11 is they priced it absolutely perfectly in terms of kind of reducing that starting price point by $50 relative to the 10R. Clearly, you saw some very easy comparisons here in the December quarter, and you're going to see it again in the March quarter relative to a year ago. So when you kind of look at the environment today versus the environment a year ago, I mean, clearly Apple is in a much better situation. As far as kind of, our expectation and, entry points in terms of Apple here. I wouldn't necessarily disagree with the comments that were just made. I would say that, as far as Apple is concerned, it's clearly had this meteoric rise over the last year, and it's very difficult to kind of just jump in there. But our view is more 12-month oriented, and if you are an investor getting into the stock now, we continue to believe the stock works at a very still favorable risk-reward type of landscape, given our view that consensus estimates continue to grind higher.
Great discussion, gentlemen. Thank you to our Apple panel, Angelo Zino, Senior Equity Analyst at CFRA Research, and Chris Johnson, CEO of Johnson Research Group. Thank you both.